Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are looking at FX and the Japanese yen. Again, another down day for the yen, but we did reach some critical levels. The dollar is seeing a lot of strength. We broke through the 200-day moving average. We broke through 110, both of which were seen as key resistance, and the dollar really starting to take off. Recall 2017, the year the dollar would like to forget. You saw the yen really strengthen against the dollar pretty much all year, even into spilling over into 2018. And as recent as the end of March, we saw the dollar yen around 105. Well, a few days after that, we saw 10-year yields hit their low of 271, and since then, 10-year yields have been on a tear higher, today eclipsing 305. Well, the dollar's been following suit, and we've seen the two rally together. So the dollar now above through key resistance and the 200-day moving average, likely targeting 111.5 in the short term. The 200-day moving average has been something that the dollar yen has not traded above going back to January. So this is significant. And right now, if you look at what the BOJ is doing, what is the BOJ going to do to kind of maybe nip this in the bud a little bit? Well, the BOJ and Kuroda, they're looking to normalize rates while other central banks are raising, or at least talking about raising rates. There's not going to be any rate hikes come June 15th when the BOJ next meets. However, they may want to jump in at least and hint at some kind of normalization, whether that means a reduction of asset purchases or what it means. Right now, we don't know. It's just very unclear. But certainly the BOJ has its work cut out for it if it doesn't want to be left behind, because in Europe they're talking about withdrawing stimulus. In the U.S. they're already raising rates. And now we have Japan sort of sitting there idly doing very little. So a normalization, what does that really mean? We'll probably find out in the coming weeks and months. Although we look at GDP, they've had 8 consecutive quarters of GDP growth in Japan, something that is pretty outstanding. However, we're expected for a non-growth number, a negative number GDP. That could be something that could be the thorn in their side if growth starts to falter, especially when they want to begin to withdraw stimulus or at least talk of it. Because if growth starts to falter, inflation, we've seen wage inflation in Japan, but that could be the next. And I think that right now that could be the thorn in their side. So right now the Japanese yen and the dollar right now starting to divert ways. We see a much stronger dollar. We see a weakening yen going through key resistance. So right now looking at a range of 111.5, might see a pullback down to 108.5, but the 200-day average right around 110 is the key here. And the Japanese yen not looking very strong. The dollar definitely is. This is Todd Colvin coming to you from the floor of the CME Group.